Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, December 9th, 2019. What I want to do in this video is take a look at crude oil and the energy stocks, in particular the oil and gas exploration and production sector. The energy stocks appear to be setting up, in my opinion, very bullishly for quite a while. Starting to see some early signs, a couple breaking out. What I won't do today is cover the entire sector, because there's 130 stocks on my E&P watch list. That's exploration and production stocks alone, and so too many to cover. I'll highlight a few, and then I want to work through all that list. I have a long watch list. I need to cull that down into a short watch list, some of my favorites, but there's also an ETF, so I'll get that out to you guys. And you can, an ETF is a one size fits all. XES would be the ETF for the exploration and production sector. I'll get to that in a second. But as I like to say when I'm analyzing gold, I always say any analysis on gold is incomplete without analysis of the U.S. dollar. Well, with crude oil, although the dollar does impact crude, because crude is, globally it's traded in U.S. or priced in U.S. dollars, but more so than the dollar is really the stock market. So let me start there, and then I'll roll into the charts briefly of crude. Crude oil, we'll look at USO, the ETN that trades crude, and or tracks crude, and then just we'll look at the sectors, and then we'll wrap it up. So it won't be a very long video, because again, I'm not going to cover all the individual. There's just too many, and too many that stand out. That's the thing. I started to go through the watch list to highlight some of my favorites, and I mean, wow, they're really setting up. So let's start out with the comparison of crude oil and the stock market, and then we'll go from there. So what we're going to do is flip over here. Let's see, I have it on one of these charts. Here it is. Okay, this is a chart with the S&P 500 or SPY. You can see up here in the upper left-hand corner, SPY is in green, and there's USO. It's one of the more popularly traded crude oil ETNs right there in white. And as you can see, now I'm scrolling back, your year break lines are right here. It's 2019, 2018. I don't even need to say anything more. If you don't see what I'm looking at, there is an unmistakable correlation, direct correlation, positive correlation between crude oil prices and the stock market. There are, as with any assets, there's temporary breaks, and as I always say, when you're looking at these correlations, don't pay attention to the differential in price. You can see, in other words, right here, the stock market got ahead. You look at the direction they're both moving. Look at the major inflection points, when they both bottom and when they both top, and the general trend that they're moving during that time period, because they're on different price scales, so you're not going to have these charts perfectly overlap, but the direction, again, the major trends. So that, with that being established, that's going to factor into my analysis as far as when to take these energy stocks, and how aggressive of a position or how large of a position to take, and then what to target as well. So we're going to take a quick look at the markets as well. Let's just start there to get that out of the way. And what the theme, I guess, of this video is, if nothing else, I'm going to add a trend line here as I'm doing this, an additional trend line, is that I still have my concerns on the market. Like I said, it's been very resilient. We did get, market started to wake up. They perked up here recently with that sharp move down, the perfect bear flag that played out, but we failed to take out the 8200 level. We had a brief, what I call momentum fueled overshoot, closed right back on there with the 60-minute candles and rallied off that level. Again, it was a perfect measured, we hit the measured target of the bear flags, and so the market is still, for many weeks, going back all the way here. I said that's the level it needs to break to really get going to the downside. So look, the trend, it's in an unmistakable uptrend right now, intermediate and longer term, but I have my concerns. And I throw this video out there. If you don't have concerns, if you're looking for a strong rally into your end, then a lot of these you could certainly take a position. I have a starter position I took recently in the energy stocks, and I'm going to look to layer on some individual names. But again, as far as the timing of when to really take an aggressive position, I want to be a little more confident in the markets. In the month of December, kind of like the week of Thanksgiving, we had the month of December, and the closer you get to the holidays, more and more traders taking off. You have a low volume kind of situation where whipsaws are likely, or at least the chance of a whipsaw is increased. So I'm going to add a level now. Sorry, I just saw a level that stands out as I'm doing this. That's how my mind works. I just want to put a support level there. Okay, just quickly, in a nutshell, what I see in the stock market is this is the NQ Nasdaq 100 futures. I've had this blue trend line here for a while. That broke right on that impulsive leg down. We flagged right under it and had that, and we're back testing it from below. Back test here again right now, rejected so far. But if you zoom in really tight, you see what needs to happen for additional downside is right about here. See this cluster of recent lows right there. Let me grab this line tool here. Right about here we have a cluster of candles as access support and this uptrend line that I just added here. So this, to me, you're wedging up here. You have a divergent high, a couple things here. You have negative divergence right there. So a break here I think takes us back down for another correction, and that's why I want to hold off right now before adding XES or any of these names as official trades. But again, I'm going to share them to get them out to you guys. And hey, maybe the market just keeps going up and never triggers a sell signal. Maybe it breaks down and it's just another whipsaw. We've had plenty of those lately, but again, we haven't broken any big support. These are just minor support levels. And the other thing that stands out here on NQ, and go back about right here, you can see on the RSI I've added two lines, one at about 86 and the other at almost 91. And I mentioned this on ES this morning, but I didn't show it. So not only do you have the negative divergence right now, which we had here, we had here, and then it played out right here for the correction. It got extended. The divergences got larger from this point. They extended to here, and then finally played out for a correction. But you also have the, color coded them, I think, appropriately. 86, that orange line, is pretty much a, when you get there, the chances you're very overbought, and so the near-term upside is usually limited when you become overbought, especially when you hit the red line. So here you had another tag of the orange level right there in corrections. So see, what I'm doing is just showing you each time we hit it. Here you came all the way up to the red line right there, and correction, right? We haven't been that overbought since until from this point back here until what was that, late October till almost late November there. And that one you got overbought. What happened? Small correction, but then you had these series of another overbought and what I call an overbought cluster, two readings in close proximity right there. That second one was it. We didn't immediately go down, but we didn't go up either. We traded sideways. We were correcting in time right there, but the divergences started to steepen, and then boom, there's your biggest drop. So without fail, I just went through, as far as this 60-minute chart will go back. If I scroll any further to the left, first of all, we're in a downtrend then. It really doesn't matter. So these are overbought readings in an uptrend. There was that one, and we've diverged. So where I'm going with this, guys, I think, and you've heard me say it quite a bit, but it's what I'm saying. The risk reward is just not favorable. The odds for another correction pullback, maybe even more than we just had, because volatility is spiked up. Remember, with this the VIX spiked up, and we're still above those, the recent lows. And so, again, I want to get these charts out to you, show you what I'm watching and where I'm going with it. Maybe I'll on a pullback here, if we get a decent correction. Could it turn into much more? Yes, but let's kind of get off the the analysis of the U.S. markets and move on and look at these energy stocks. And I just want to let you know I'm going to marry my analysis with the energy sector along with the stock market because of that first chart that I showed you, the very strong correlation. And if you're wondering why that is, it's simply there's still nobody knows for sure what's going to happen. Everyone's concerned. We're so long into an economic expansion, longest bull market ever, longest economic expansion ever, and everyone says, well, it's coming to an end. But right now, the numbers have been decent lately, and the market's going up. But what happens is when the market goes down, that is people then concerned, even the little pullback on future growth, economic expectations, and therefore crude oil. That's what crude oil is being priced on right now as well. Economic growth. Growth slows down, demand for crude slows down, and vice versa. Market rallies. Everyone assumes the stock market, or I'm sorry, the economy is in good shape. and going to grow, and if the economy is going to grow, the price of oil should go up. So whether you agree with my logic or not, I just showed you the chart, the comparison that you can't argue with. So we know there's that positive correlation. So therefore, you know, I might be a little cautious on taking some of these really nice looking setups in the energy stocks right now. ES, nice little uptrend line there. I posted this chart this morning, back testing that blue line right here, that trend line from below. Pretty important trend line, similar to the one I just showed you on NQ. Similar story, and I think I highlighted that this morning on the charts I'm watching. 88, about 88.50 seems to be the magic number on ES, the S&P 500 E-mini futures. You get to or near that level. That was a near tag there. And again, you can just follow it up and replicate on your chart. Sometimes you don't drop right away, but the upside's very limited, and then you drop. This one came after sharp correction. You really want to be careful. Don't read too much into overbought readings after a very strong drop like that. But with that being said, it still played out. We had the overbought reading right here, went up just a hair, hardly anything higher than we were at before. Boom, drop. Boom, drop. This one, you had a correction. I always say prices can consolidate or correct, I'm sorry, in one of two ways. They can correct in time, which is a consolidation, or price. Price is a drop. This was a correction in time right there. You hit overbought. Had you shorted, you went down, upside down a little bit, but you know, you would have had to stop and then eventually stopped out for a small loss. There's the next one right there, and then we continued like NQ to diverge, and then boom, big drop. So there we are now. I haven't added the divergence lines here, but you can see right there, it was starting to diverge right there. Back test, we're at resistance. We have the previous highs also as resistance. So again, very unfavorable risk reward on the markets. All right, now we'll turn our focus to crude and the energy stocks. We're on futures, so let's just roll into CL. Last week I posted that CL had broken out above this level here, 58.67 right there. It goes back all the way, you know, you see some reactions here, but right there, big old gap, and a reaction, I should say, above the gap. Here's the big old gap right here, reaction right there. So a pretty valid level, and we cut through it a little bit, but then we broke above it last week, and I said, you know, we could come back in and back test, and it's okay to undercut slightly. So we're above it now, but not really impulsive action. I'm just going to say this. I'm near-term neutral on crude right now. I mentioned this as a breakout and an objective long entry, but we do have, just as I noted here, some negative divergence again. We had the divergence here, and so let's just say I'm watching this, and I'm again wouldn't be surprised to see that breakout fail, even though it did come back in, back test, and we're back above that level now. You can see it there. That's what crude looks like, and yes, it is in an uptrend, so it may continue, and it may shrug off these divergences. I've added a secondary trend line here called the benefit of the doubt trend line, so you can see parallel uptrend lines to watch, that if you get pullbacks, as long as this uptrend's intact, that may provide objective, or should say it will provide objective long entries, but doesn't guarantee it'll pan out, and you just stop out somewhat below if you're buying the dips. And so the bigger picture is this price channel right here, and this is crude working its way up within an uptrend. We're towards the top of that level now. So from that 60-minute chart, you know, the trend is bullish. We're above, trying to clear. It's not a clean breakout right now, but about that 58.67-ish level. So, you know, if I had to be one or two long or short, and let's say, you know, tuck it away for a couple weeks, I'd rather be long than short. You know, we could pull back here, you know, but again, I'm somewhat neutral now, so I'm gonna just give you those levels and let you decide what you want to do there for crude. Let's look at USO on the daily chart. USO, I'm going to take all these lines away. Bigger picture, as I've mentioned recently, it's been pretty much locked in a sideways range right about here between these levels. Little pop there, but it was a failed breakout. That's bearish, failed long side, bullish breakout above resistance. And as often the case, when a breakout fails, the ensuing move is usually pretty powerful. And that was a sharp drop back to the bottom of the range, but it's a pretty well-defined range on both the top and the bottom, and we're there now. So here's the story again. Crude oil is at resistance. So and at least by USO here, You know, although I had CL slightly cracking above a 60-minute resistance level, this is a more significant daily chart. A lot of people watch and trade USO, so you have it at price resistance. So I have to say, you know, unless you get an impulsive breakout, and we could break out above here anytime, it's not prudent to go aggressively long, and even to take these setups I'm going to get to in a second, the energy stock sector. You can start building a position now if you anticipate a breakout. Like everything, use stops, because the energy stocks are still in a downtrend, a larger downtrend. We'll get to those charts in a second. Crude is in a sideways trend. I wouldn't call this a bearish or a downtrend. Again, as I said, you know, at least the intermediate term trend since back in May is sideways. Bigger picture, again, looking at this chart, let's just focus on that intermediate term trend. And now I turn my trend lines back on, and you can see that I have, this is our current trend line to watch. I've had a series of trend lines which were broken out. We broke this one recently that was pretty bullish. There was that failed breakout above the trading range right here and the move down. It was also failed breakout above that trend line right there, that colored blue. Now I have this yellow trend line, and we'll see what happens there. That's we'll call it the benefit of the doubt trend line right now, because that's the uppermost trend line. Comes in from that what is that, late September, early October high, September, and where we're at right now. Here's an uptrend line to watch. If we start to reverse, if we get rejected off that level and or the top of this trading range, just so you know, you zoom in here, the top of that trading range is about 1265 is where I have that line. And well, I have a range from about 1243, about where we're at now, up to about 1265, give or take. You can see the levels there. And should we reverse this break of this trend line, very well could usher in more selling. So I'm going to say this would probably coincide with almost certainly coincide with those negative divergences on the daily chart that I've talked about on QQQ and SPY playing out. And believe me, nothing has changed on the daily. In fact, a member of the site, if you visit, was it Friday's post, the last update I did on the markets, a member of the site pointed out something that you know, it kind of dovetails on what I've talked about, these bearish PPO crossovers. Remember, we put up this histogram, and you have these hills, if you will, these green hills. When you're trending strong, these nice clean separation, that's a bullish trend. And then you get a bearish PPO crossover, and you have these corrections here, bearish PPO crossover correction. Nice green trend, bearish PPO crossover correction. You can see the corrections down there, and most recently we had a bearish PPO crossover here. Now, what that member had mentioned is you can see it here on the histogram, but you can also see it on the PPO lines. Let me just pull these up real high. They pointed out, look, after you get the bearish PPO crossovers, that comes right here when the orange line crosses the white line, PPO line down below the signal line, you tend to get a kickback where the market has another leg up. The buyers step in on the correction, first correction, but yet you were rejected. You were rejected there. And again, I like clean crossovers. This is a little whippy period here. Let's stay away. Let's look at these. Right here you had it again. And I think that member was using SPY. You might have had a couple other instances back then. Here, I'll grab that. Okay, here it is from member Preston Peck. Randy, what do you think of this? Past big falls in QQQ have been preceded by strong breakdowns and backtests on QQQ in both price and on the PPO. Here's Preston's chart, and shows you, you get this little kickback here. See it there in the PPO? Pretty nice job. And you can see the kickback rally. That one took, after the crossover, it took the market to higher highs, but yet the PPO was still lagging. Same thing here. Your crossover came right here, but yet the market went on, made a new high, just like now. So as I often say, history doesn't always repeat, but it often rhymes. And so there you have it. Nice chart, nice observation by Preston. Thank you very much for sharing that. And back to where we were on the charts here. So there it is. There's QQQ, and there's our little kickback rally right there, and a rejection on the PPO line from below, off the signal line. So far so good. We're still on sell signal right here. This is a pretty good, pretty accurate trend indicator. Again, it's caught all of the corrections this year and identified them, and did a pretty good job of telling you, hey, we're in correction mode. And yes, there were relatively small corrections so far, although this one was pretty decent. But So that's that. Okay, and a quick look at the charts. XLE is your main energy ETF. This is, if you want to look at really what the effect on the S&P 500. It's this one. These are your big integrated oil companies. Exxon, Mobil, Chevron, BP. Those big companies. And you can see it's pushing against downtrend line resistance. Bullish divergence right there. PPO is above the zero line right now. Back testing it from above. So check. On a lot of bullish potential developments here, but still needs a breakout. As I often say, resistance is resistance until unless taken out. So my guess is the market looks pretty lofty. We just made the case. I spent a good part of this video talking about the stock market, even though I want to get to the energy stocks. That's the main point of this video. But again, I looking whenever I find a bearish or a bullish chart setup, I do my best to either confirm or refute that analysis. And if I'm seeing conflicting signals, I might take a step back. Maybe I take a position, maybe not. But if I do, it certainly wouldn't be an aggressive position unless the stock market confirmed with this because of that high correlation. So in other words, maybe we could certainly have another thrust down, even a new low right here, take out that previous low and extend the divergences. So this is a setup that it could trigger now if the market powers on through these divergences we're at now. We get the daily PPOs cross back over bullish on the indexes. It's possible, and then this thing could break out. But as of now, like I said, we're in a downtrend, so make no mistake about it. Bullish setup and an actionable trade are two different things. This is a potentially bullish setup, not really an actionable trade. And like I said, you cannot argue on the energy stocks, wrong tool, that the trend, at least for a while, has been down. And you can see, even though oil's traded mostly sideways, look where the energy stocks are lagging. So if oil broke out, going back to USO, I want to point this out. Remember, oil is at mostly at the top of that multi-month trading range, right here, like that. But yet, when I look at the energy stocks, they're behind. And if you remember earlier this year, I mentioned that with gold and silver, that I expect silver stocks to outperform because gold and gold mining stocks had rallied quite a bit, while silver and the silver mining stocks, or particularly silver, the metal, had really lagged behind, and it played a game of catch-up. So you can see this underperformance right now of the energy sector. These are the individual stocks, energy stocks, versus crude oil, which is already up here. So ideally, for me, another pullback, and we're not even here, another pullback in crude and the energy stocks, and maybe I'll look to buy these at a lower level in anticipation of the eventual bounce, or wait for the breakout, or probably both. I might do that. Let's get away from XLE because I think there's more bang for your buck in some of the subsectors. So again, XLE is big oil, and these are your typically your smaller companies in the energy sector. This is XOP, the Exploration and Production ETF. And you can see, nice looking chart. We had divergence back here, divergent low. That divergence has been extended, and this is what I talk about often. Divergences are not a buy signal. Although, look, in that case, you had a big rally. Don't get me wrong. The thing went from, let me grab that low point there with the crosshairs. You got a pop of about 27%, and this is the ETF. That means some of those individual stocks probably went up 50% or more. The whole sector did about a 27% rally. So from there, you pulled back in, and the same divergences that were in place then have only been extended, setting the stage for a larger rally, a trend reversal. There's your downtrend line you need to break out. So again, it looks very promising. Not a bad, if you want to start scaling in, but I think there's a decent chance you're going to get another down. Maybe not, but we'll watch this. So here's some levels, about 22, we'll call it $23 or so. Not a hard level there. I think this one's more important, about 24.61. Here, I'll color code that, make that yellow. See quite a bit. This was support. That's why that level stands out to me. It was support back here, and then we broke that support, came down, tried to regain it with that failed breakout. That's when, remember, when crude had a failed breakout, and it was a false breakout here as well. So I think the next punch through about that 24.61 should do the trick. Of course, a downtrend line breakout will help, and there's XOP. And then the other one I really like is XES, really setting up nice. I mean, this is a clean bullish falling wedge. And again, these divergences have been building for a while, at least at this point here. Actually go all the way back here, and you can see these divergences building for quite a while. There's a downtrend line. I have to say it's not the most valid trend line because there's only three, well, right now, not even a reaction yet. Two reactions. If we get a pullback here, that'll be a third reaction. But about 750 also. It's pretty nice resistance there. So and keep in mind, there's been that tight correlation in the stock market, but there are times maybe the stock market corrects or chops around for the rest of the month. These things could break out. That's again why I want to get this video out to you. I want to give trade ideas, and this is one of the better looking sectors in the S&P 500 in my opinion. And for again a bottoming play, or at least a substantial bear market rally, if that's what it's going to be. Potential targets up here, that's XES. If you like the leverage ETFs, DRIP, well, DRIP actually is the bearish one. That's the bearish exploration and production, or you can go Gush. Of course, you'd go if you're bullish. And that's what it looks like. It's a leverage ETF, so there's going to be decay. So the chart is, best to trade off XES. At least for charting purposes, even if you're going to buy this one. But you can see the same story. Nice, clean, divergent low, bullish falling wedge, and a lot of upside potential. I'll give you a rough target right now, rough swing target there, if you're interested in that one. But the only time you want to hold these or a swing trade that might last weeks or even months is if you happen to catch a what I call a unidirectional rip or dip. If you're short, you want to be short this time, you can actually do better than 300%. But when you get caught in a choppy, right here, this is an example of exactly when you don't want to hold. And I talk about that in the FAQ page as to why. But these choppy sideways periods, whether you're long or short, that's when the leverage works against you. Now, this is a powerful pattern. If this broke out, we could see. So I'll leave it up to you. If I add an official trade, I'll probably use XEX or XOP or both. But that's Gush. And then I'm gonna go back to XOP. And no, let me do this. Let me go to XES. Okay, sorry there, I had a phone call. I had to pause the video for a second. We're going to jump in and just look at a few of those stocks in the E&P sector. And here's one, not in any particular order. I'll just highlight some that are moving today. We'll do that. I'll just sort by gainers today. But you can see that there's a common theme. And I've started to go through these charts. I've went through several dozen already, and it's just one after another with the same technical setup. My type of setup doesn't mean it has to play out or will play out, but it's a setup I like, and that's these divergences that have been building for quite a while. I'm starting to see some impulsive moves up. Here, there must have been a reverse split. Let me move these old levels off here. But this one's breaking out today, up 13%. I don't see any resistance at this point. It cleared the recent highs. Unless this breakout fails, and now that's a possibility. And that's again why I was doing all the coverage on the broad markets. If they fail, this one could fail. Maybe then you'd look for a objective entry on a back test of the trend line unless we fall back below it. But I don't see any resistance till 91. This is a low price stock, so let me get away from that. That's a penny stock. Keep in mind too, if I don't make mention, the penny stocks have a much higher risk. There's been a lot of companies in the past 5+ years that have gone bankrupt in this sector with the collapse in energy prices and crude prices. So keep that in mind. But you can see here we had a divergent low, and it doesn't look like much on this chart, but that was a 40% rally right there. Let me go over just a few that are moving today, and again, not in any particular order, not necessarily my favorites, but here's AR up 24%. These guys can move. This is not a penny stock, but it's a low price stock. Same story on all of these. I haven't updated each and every chart. Bullish divergence, divergent low, starting to move up impulsively right there, and a downtrend line to watch. If it takes out that downtrend line, this one could really run. There's another one. That's a penny stock. Let's move away from that. OBE I just covered. WLL, look, nice bullish falling wedge. There's your downtrend line. Big resistance. So it seems that these guys have broken down recently below pretty important, a lot of these stocks, below important price support. But if they can regain it soon, so this one needs to take out the trend line and 613, then this whole thing will prove to have been a bear trap, i.e. a false breakout, and that could send us up here to any or all of these targets potentially. And that's 560 right now with potential target. Let's just say if it regains that level, I think a good very good chance it moves up to at least that $11 level. And again, it's probably going to need the stock market cooperating to do that. Not necessarily, but that's something to watch. And that's WLL. And again, as I rifle through these, well, there's one that stopped trading. I was in the sector. I don't know what happened there. Maybe bankruptcy. It was penny stocks. So again, watch out for these penny stocks. And there, as I go through this list, they're the ones moving the most today because their low price stocks tend to move the most. Again, like 1 to 50 reverse split. This guy's probably going to be gone soon. So be careful of those low price ones. RRC, nice looking chart. You know, $4 stock. Divergences have been building, as I often say. Positive divergences are not a buy signal, and that shows you there, you know, even though you had a nice rally off that divergent low, you had a nice rally off that divergent low, and they continue to build. So I'll stop it here because I could go through this all day, and what you're going to see is that I would say, I don't know, 80% of these stocks or so have these nice looking setups, not just divergences, but pretty clean levels, either downtrend line or price resistance levels in which to trigger a long entry. So these are going to stay on my radar. Again, I'll try to follow up with some of the best looking individual setups, but the easy way to trade the sector to get exposure if you're looking for something, especially if you're bullish on equities. If you're bullish on equities into the year end and beyond, then you know, if I had a high degree of confidence this market was going to continue to rise through the end of the year, well into the beginning next year, I would be overweight this sector right now. I would tell you that because I think it will outperform to the upside substantially. Again, that's contingent on the the stock market going up. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.